Welcome to the Sellernomics Podcast, sharing valuable tips and information in the Amazon and e-commerce space. Each week, we deliver the best interviews with some of the top Amazon personalities in the industry to help you grow your business. Today's episode is brought to you by GETIDA, the global leader in FBA auditing and reimbursements. And now, here is your host, Rob Stanley.
Hey everyone, Rob Stanley here with the Sellernomics Podcast, and today I've got a great guest. I got Jacob Schwartz from Payability. How's it going, Jacob?
I am great, Rob. How's everything going on your end?
Doing good, doing good. So today we're going to be talking about funding options for Amazon and e-commerce sellers. That's kind of a big, wide open topic, and I'm sure that you would probably know more about it. I've been lucky enough to interview quite a few people in this space. So, and Jacob has been awesome at, dealing with people and kind of helping them with different funding options and different things that are available to them that can help them when they're kind of maybe not necessarily struggling, but maybe it'll help to boost their business. So Jacob, how do I know if funding is right for my business? And also just to throw on top of that, at what point do you see most people are kind of looking for funding or help when they're trying to grow their business?
Yeah, it's a great question, right? And I think it really depends where you are in sort of your life cycle of selling, right? You are either brand new, 6 months in, a year in, or a legacy seller. And it comes down to supporting demand that either Amazon or you're driving to your own website to a point where you know that cash flow is negative. There's more money going out than that may be coming in. Margins are a little thin. Can additional working capital help me to increase my margins to help me grow my business? And that's really the question that I think that you ask yourself when you evaluate funding is, can I put this money to work? Can I make the most out of it? And can I make money out of it? So it's really sort of that transition from, all right, I was a hobbyist for about 3 months now, and this is starting to turn a little bit more serious in terms of velocity. Let me take out some working capital to try and help me get to that next level. So that's usually how we see it from our end here.
Yeah. So when it comes to getting working capital, there's usually a good way to use working capital and a bad way to use working capital. So what kind of ways do people usually use the working capital, or what have you seen that helps them grow their business when they get that working capital?
Yeah, it's a great question. And the folks that come to Payability are usually looking for two reasons. And that's inventory and marketing, right? Is that, Amazon is such a huge demand engine. You need to constantly replenish, and that, as that money is going out, it's coming in, and cash flow is usually a little bit negative. So to really keep up with velocity on the inventory side, and or as well, if you can negotiate terms and in terms of cash payment, being able to see discounts in terms of taking out capital and putting that to work on inventory, it's huge, right? You're able to support the demand, support the velocity, as well as if you're seeing the return outweigh sort of that cost. It's always going to make sense. If you're saying, you know what, I can only support this from an inventory level without any working capital. I'm scared from an interest rate level to take out capital based on how high some rates are. It all comes down to, what am I going to get out of that? If I can turn my inventory in 30, 60, 90 days, depending on the type of seller that I am I seeing that flip within those 30, 60, 90 days? Can I flip inventory twice or 3 times and make that money back plus a ton more? That's what we see from the inventory side. On the marketing side, right? It's being able to increase that demand, to drive traffic, to say, hey, I'm looking to take my business to the next level, and I need X amount of dollars to invest into PPC, into marketing, into paid media, whatever it is that you need to grow your business from a marketing aspect. And being that, cash flow may be negative as an e-commerce seller based on sort of the flow of funds, you need additional capital to help you scale on the marketing side. So that's generally what we see.
Jacob, could you give us a specific example of how somebody has used Payability's funding or one of the options Payability has, which we'll get into a little bit more on the next question. But what specifically what kind of growth they saw from it, or what they accomplished from getting that funding is, I guess, another word we could use.
Yeah, and I think it's sort of the classic example, right? Is that we support sellers doing $2,000 a month in sales, up to sellers doing millions of dollars a month. There's really no cap. So generally, the common story is that we have sellers that come in doing $10,000 to $20,000 a month in sales. And there's not really many providers out there that are going to support a business that's either A, too young, or B, too small. So generally we see, hey, my business is scaling. I'm looking to take this more serious. But Amazon isn't paying me out. And that's really where our instant access product comes in, and being able to accelerate those payments so that you can generate cash flow, reinvest back into the business. So we have tons and tons of examples where sellers are coming to us at that 10 to 20K a month mark. They're able to get accelerated payouts or an advanced product. And next thing we know, 6 months, a year later, they're doing 50 to 100K in monthly sales. And that's really just a common scenario that we see across the board, is that we have sellers come back and say, hey, you really helped me take my business to the next level in a time where nobody else would support me. I was able to get the capital I needed to invest back into the business at a time that I really needed it the most. And now I'm at a point where I'm a little bit more secure in terms of my selling model, my flow. And that's really what we see in terms of sellers who are too small to get funding elsewhere, but really are passionate and able to execute on their model, and then insert Payability's factoring, instant access product. And next thing we know, they've sort of accelerated their growth, being able to have positive cash flow at such a young stage.
Yeah, we had a question come in. It looks like Jeff's out there asking, he said, where is the best site to get going as a newbie? I think and then he followed it up, and I don't mean Amazon's site. I mean the best to get going as a smart seller, please. Okay, so Jeff, we really appreciate the question. Appreciate you listening in. We're actually today talking more about funding options for Amazon sellers, which is usually sellers that have already been going or getting started, already kind of selling on Amazon. As far as looking for a new site or to learn more information about how to get selling on Amazon, I recommend heading over to sellernomics.com. Check out some of the other podcasts that we've done in the past. There's probably some in there that resonate with you as far as some sources that you could go to learn more about it. But again, today I got Jacob Schwartz from Payability, and we're talking about funding options for Amazon e-commerce sellers. So Jacob, we went over kind of, at what point is right for people to get funding, some of the examples of what they've done with it. Now, I know for a fact that Payability has several different really cool options available for sellers, just not even just funding. But why don't you go over some of those options and how do each of those options help the seller?
Yeah, that's a great question. And yeah, so I mean, Payability's two core products. Really, the flagship for Payability is Instant Access, which is accelerated payouts, like I was just discussing, being able to get your delayed marketplace payouts the next day instead of having to wait that 14, 20-day float, whatever it is. So we support that on Amazon, Walmart, and Newegg. And then on the other side, we have our advanced product, which is essentially an advance on future sales. So we're taking a look at your past 3, usually 9 months of history in terms of selling, to say, hey, here's what we can do in terms of predicting what you're going to do next month in sales, and give that to you upfront in the form of an advance. So those are the two core products. As well, Payability Seller Card, which is really great for sellers who utilize it, is essentially it offers up to 2% cash back. Our sellers can load their earnings, load their advance onto the seller card, and use that for whatever spend is necessary. It's pretty much just a debit card that can be used anywhere. So if you can make use of sort of a debit card to cover expenses, we have sellers who are essentially offsetting their fees just by using that seller card. So it is a really great asset. And then our other tool is the payability wallet, essentially where the funds go into. So essentially, we are fronting those funds directly into the payability wallet, which could then be transferred into your into your bank account or onto that seller card to get cash back. So really two core products with sort of two ancillary products that come with sort of the core products.
That's great. I appreciate you giving us kind of a description of the different options available through payability. We're going to take a quick break, but before we do, when Jacob comes back, I'd like him to answer what kind of differentiates payability from some of the other options out there. As you know, Jacob knows we're partners with all the different funding options available out there. We're all giving them all a chance to come on here and talk about it. But I'd like just for Jacob to kind of just give a little what differentiates payability from everybody else right after this break.
Today's episode is brought to you by GETIDA, the global leader in FBA auditing and reimbursements. Get $400 in free FBA reimbursements at GETIDA.com/Sellernomics.
Yeah, so to get that $400 in free FBA reimbursements, head on over to GETIDA.com/Sellernomics. So just to bring everybody up to speed, I've got Jacob Schwartz from Payability on with me, and we're talking about funding options for Amazon e-commerce sellers. And just before the break, I wanted to ask Jacob about what kind of differentiates payability from some of the other lending sources out there. Take it away, Jacob.
Yeah, of course, and it's really the hot button topic is what differentiates payability or any other provider out there in terms of capital. Really, when it comes down to payability, number one, we're marketplace agnostic, right? So essentially, what we will aggregate your sales if it's across Amazon, Walmart, Shopify, Newegg, eBay, and Etsy, which we support as well, and being able to see sort of that whole view of what's under the hood, and not sort of just say, hey, we're specific to what's in your bank account, or what's in one specific Amazon Seller Central, and that's really unique to us, is to be able to take that approach of aggregating every marketplace that you're selling on and give you an offer based on that. And then number two, I mean, our ability to support smaller sellers, the ability to help out folks. I mean, our qualifications for our instant access product are $2,000 a month in sales and 3 months in business. So essentially, there are no other providers out there that will help sellers out, or businesses even that young, all the way from alternative lenders and solution providers to banks. There really is no provider out there that is going to help you out at that stage. And that's really what's unique to payability, is to say, hey, we are here for the folks that need us the most, which are folks who are looking to get ramped up. So those are two super unique things, as well as the ability to have multiple products within the e-commerce space, the ability to have accelerated payouts in advance, side by side. Utilize that seller card to get cash back is unique compared to some of the traditional, say, brick and mortar ones who are, say a Shopify Capital is specific just to one platform and one product. It's the ability to have multiple financing products and being able to get the most out of it with an e-commerce approach. So that's really what differentiates payability.
So you touched a little bit on the qualifications for it, but could you go a little bit deeper on each of the different options that are available from payability, and what people need to apply, or what, kind of what's the minimum requirements for the different options you have?
Yeah, it's a great question. So for the flagship instant access accelerated payout product, essentially we're strictly looking for 3 months of consistent sales, as well as $2,000 a month in sales. And that's generally strictly for sellers on delayed payout marketplaces. So for Amazon, for Walmart, for Newegg, folks who get paid out on that net 14, net 20, net 30 schedule, those folks would be eligible for that qualification of $2,000 a month, 3 months in business. On the advanced side, for Shopify sellers, we're looking for $5,000 a month in sales. and 9 months in business. And then for all other platforms, we'd be looking outside, which would be $10,000 a month in sales for the advanced product, and the similar 9 months in business. So, so for an advance, more of a structured upfront sum, you do need to be a little bit more qualified, more sales history, whereas the accelerated payout product is eligible for sellers who are 3 months in business, $2K a month in sales.
And Jacob, what about when it comes to APR, annual percentage rate, or rates on these loans, and I'm sorry, on this funding option, or even on the card? Give us a little bit of information about that, as far as like the APR, and why does that matter to some of these sellers?
Yeah, it's a great question. So, I mean, APR is, one of these terms that's been used in traditional lending if it comes to mortgages, home equity line of credit, a bank line of credit, an SBA loan. It's really just a term that's been drawn up by the banks to make longer term debt look more attractive. So when it comes to shorter term financing options, like a factoring option on payability, or an advance option with payability, or any other provider, APR usually isn't the best figure to look at these options. We're usually looking at cost of capital, right? So for these options, it's, if I'm taking out 10,000, how much am I paying back at the end of that advance term, and how much can I make off that? So when we think about APR in terms of payability, it's not really too relevant per se to a factoring product, as you're paying a fixed flat fee to get access to those funds. It's really just a term that's been used by traditional lenders, and what we say is, can I put this money to work, and can I make X amount of dollars cost of capital? So for anything where a term is under 12 months, APR is usually not so applicable in these situations.
And Jacob, on average, how long do you usually see an average Amazon seller kind of use the funding with you guys before they kind of don't need it anymore, or they've built their business up, or maybe got things going, or maybe doubled or tripled? What's kind of on average you guys see with that?
Yeah, it's a great question. So, I mean, we have sellers that have stayed with us for years and say, hey, this is essentially a way for me to get paid out quicker. And that's really all that it is. And then we have sellers that are seasonal, right? And that maybe only need our accelerated payout product in October, November, December, and sort of say, hey, in January, I scaled down, and I don't need access to this product. So, we have sellers that come in September, leave in January. We have sellers that have stayed with us for years. We have sellers that have used us for the months where they need it, based on seasonality, and that's really it. So across the board, it really just depends on the type of seller that you are and the type of product that you're selling. So when it comes to the advanced side, we see sellers constantly replenish at 50% paid down. Our sellers can take out more capital on that advanced product. So we have customers who are now taking out 3, 4, 5, 6 advances, just based on the ability to replenish their funds and continuously use it. I think when it comes to leaving payability for good, or maybe moving over to traditional financing, I think it comes to a point in your life cycle where you can say, I've completely reached a point where cash flow isn't an issue. I can get access to the traditional financing that is necessary at maybe the longer term structure, or the cost that is most useful for an already scaled business. So I think it comes down to scale, size, and sort of product and seasonality.
And Jacob, a lot of people, I mean, obviously, if they're listening to the show, they sell on Amazon, and they're probably aware that Amazon also does funding. And I'd like you to kind of specifically talk a little bit about how payability is different than Amazon funding, and maybe also go into some of the cost of what it costs to be with payability. Let's do that right after this commercial break.
Do you know that Amazon probably owes you money for FBA reimbursements? Get $400 in free FBA reimbursements at GETIDA.com/Sellernomics.
Yeah, so I'm talking with Jacob Schwartz from Payability. We're talking about funding options for Amazon and e-commerce sellers. And just before the break, most people that are listening to this are Amazon sellers. They are aware of the Amazon funding option. I wanted Jacob to just kind of address what sets Payability apart from the Amazon funding option, and also maybe some of the cost involved with Payability on average. Go ahead.
Yeah, great question. So really what the differentiator here is that Amazon doesn't offer an accelerated payout product, right? They strictly offer what is a loan or an advance, and that's all they offer to their sellers. So also, I mean, the main differentiator there compared to our advanced product is the agnostic viewpoint of that we will not, just strictly look at Amazon. Is that if you are selling across multiple platforms, like most folks are these days, you've got your Amazon, your D2C, maybe you're selling on Walmart now, as that is coming up, is that, we can now, underwrite and give you an advance based on all of those platforms. The real differentiator here is that, you're going to that Amazon lending page within your Seller Central, and you go, oh, this looks great, but you know what? 30% of my sales are coming from other platforms, and maybe I can get a larger offer, a better offer, bigger offer, better terms based on sort of this holistic view. So really the differentiator here is that they don't offer the product, our flagship instant access accelerated payout product, and then B is that they are sort of closed off strictly to Amazon sales, and that's really the two main differentiators in between why someone's going to use an Amazon blend-in and use a Payability product.
Yeah, that's good information, and definitely information that people need to know when they're looking at the different options out there. As far as I'm aware, and I could be wrong on this, but Payability has been around quite a long time, and one of the early adopters of basically funding Amazon sellers. I mean, I've been in this e-commerce space 20 plus years, and I remember some of the very early sort of Amazon shows, Payability was there. They had a booth. And, that's always great. So maybe give everybody just a kind of a little background on Payability, how I forget, or maybe you have the information on how long it was that they started, kind of how they started out and where they're at now. And maybe also give us a little insight. Is there anything new coming up in the space that, as far as funding, that Payability is working on, if you can share that?
Yeah, great question. And to give the background, Payability was founded in 2015. In 2016, we did launch that instant access product for 3P sellers. I mean, originally we had started out working with 1Ps and realized, oh wow, the world of 3P marketplace sellers is a lot larger and a lot more necessary, say, for a product like this in terms of cash flow and being able to solve for cash flow. So 2016 is really when Payability got its start with its flagship instant access product. And then the advanced product, sort of the supplementary advance, was rolled out in late 2018. And that was really when we sort of expanded outside of just an accelerated payout product into more of a two-way approach in terms of funding. So that's really the model that Payability has been on. The flagship has always been accelerated payouts for marketplace sellers, and being able to factor those receivables as we've seen in the past 2 years. The Amazon marketplace has exploded, and we've seen a large uptick in demand for Amazon sellers. So super applicable, super niche, as there's not really other providers out there doing this. And yeah, that's really how we've seen it.
Yeah. And also, Jacob, why don't you give just a little background on yourself, maybe where you came from, how you ended up at Payability. And then everybody, please stay tuned, because we have a special offer for anybody who's interested in getting some funding with Payability right after Jacob gives a little background on himself.
Yeah, of course. A little background about myself. So I got started within the small business, traditional brick and mortar alternative lending space about 7 years ago now, at a company called On Deck Capital, one of the largest providers to traditional small businesses, brick and mortar, essentially got started in sales there, where sort of started my career, accelerated my career in sort of the financing space, the tech space, the alternative financing space, and accelerated all the way through, worked for a couple other companies within that space, one more so like a marketplace for financing options, and then another competitor on the direct lender side called Blue Vine Capital. So yeah, I've always been with sort of the largest brick and mortar lenders, and then had the opportunity last year to join Payability, sort of join this rocket ship of e-commerce and be part of a booming industry. And yeah, really was able to get my feet wet in terms of e-commerce. So in terms of e-commerce, relatively new, only about a year in, I've definitely learned a lot. So I bring sort of a strong background in small business financing, everything from SBA products to short-term lending products, and sort of transfer that over now into Payability's e-commerce financing products. So long history in small business lending, and now I am in e-commerce.
That's great. That's perfect. And good information. Some great information, actually. Real quick, before we give out the special offer, head on over to sellernomics.com. We just got the website up. If you missed any of our past podcast episodes, be sure to head over to sellernomics.com. Finally got that up and running. It took me a little time. But let's go on to anybody's looking for funding, looking to get a great funding from Payability. We have a special offer for them. I'll put it on the screen, and then we'll also read it to anybody who's listening. So a couple things. To contact Jacob Schwartz at Payability, you can do intro at payability.com. It's payability.com. I think that's more just like a general introduction. And then if you're looking to get a special offer, they offered $250 sign-on bonus at go.payability.com/GETIDA. That's go.payability.com/GETIDA. Again, that'll get you $250 sign-on bonus with Payability. Jacob, if I missed something, please be sure to chime in. It's been absolutely great having you on. And did I miss anything on the contact info or the sign-up bonus?
No, not at all. Yeah, if you just go payability.com/GETIDA, you don't need to go. As long as you just have GETIDA in there, you are good to go. So yeah, you hit it right on the head, Rob. I appreciate you bringing me on here and letting me sort of bring some knowledge in terms of the financing space, and hopefully everyone who's here found this useful.
Yeah, no, I really appreciate you being on also the Sellernomics podcast. Your first time on the podcast with me, if I'm not mistaken. I've had a few other people from Payability on. So once again, everybody, if Jacob Schwartz, he's head of business development and strategic partnerships with Payability, Payability, payability.com. /GETIDA, just so you can get that bonus. If you want to check it out, please sure to head over there. And it was great talking with you about funding options for Amazon and e-commerce sellers. Jacob, I really appreciate you being on. Thanks so much.
Thank you, Rob. Appreciate it. Enjoy the rest of your day. Take care.
Thanks for joining us this week on the Sellernomics podcast. Special thanks to our sponsor, GETIDA. Did you know that Amazon probably owes you money for FBA reimbursements? Get $400 in free FBA reimbursements at GETIDA.com/Sellernomics. Be sure to join us again next week for more great tips on how to grow your business. And thanks again for listening.